Good evening and welcome to the Gold Goats and Guns Hour here on YouTube and DLive. My name is Tom Luongo. It is Friday, June 1st, 2019. I think my hat's on straight. Guys really don't understand how hard it is being this OCD to look and see the hat is just going wrong. Just drives me nuts. All right. We're getting a lot to talk about tonight. As always, a lot going on in the world. Obviously, we talked about last night on a late night stream about what was going on, what we thought was happening in the with the Iran-U.S. confrontation in just south of the Strait of Hormuz, along in Iranian airspace and the shoot down of the drone. Turns out we have more information in that than we had before, but let's really talk about some other things that go along with this, and it's the best way of putting this. And in sympathy with that situation, obviously we've had some moves in the capital markets that I find very, very interesting. And I'm going to and that's going to be the focus of tonight's talk. And we're going to start with gold, and we're going to talk about Bitcoin. And I want to talk about some stuff that came up in the latter portion of last night's stream, talking about money and all of that stuff, and the nature of money, and why gold, why Bitcoin, why these things are important. We've touched on these things in past streams, but it's important to continue to pound these points home, because there are a lot of people in the gold community who refuse to accept the fact that electrons can be money. And this is bothersome because it's going to wind, they're free to feel the way they do, and they're going to make money in this bull market because gold is now here. And the gold bull market is most likely here, and I'm going to go over the reasons why I think it's why it's close, why we're closer today than we were 2 days ago, and why we'll be very close by the time we get to the end of the month. And I'll go over that stuff. I might even throw up some charts if I'm feeling froggy tonight. We'll see if I decide to take that leap or not. But we've got gold at $1,400 an ounce, which is technically very significant. We've got Bitcoin at crossing back over 10,000 tonight, as I'm sitting here talking to you as well. Talking to you all. So we're going to talk about that as well. But before we get much farther into this, please, if this is your first time into the stream, please give a like and subscribe down below. Please, consider donating to the stream and all of that stuff. There are links to ways you can do so, either via crypto or via PayPal, or you can sign up for my investment newsletter, which also comes with twice weekly private market reports, which are about half-hour podcasts with slides and charts and technical analysis of very important markets, including anything you decide you want me to cover. I'm more than happy to do a chart read on your favorite stock, your favorite crypto, your favorite bond, your favorite ETF. I don't care. You send it. You pay me $4 a month for the private blog and the private podcast, and I'll be happy to throw a slide up or two every week for you. It's part of the service. Anyone that as I tell my subscribers all the time, that this is your service. I serve you better when you tell me what you want me to cover. And I can come up with stuff to talk about all day long. I like talking. But it's always better. The copy's always better when I'm throwing a curveball and someone asks me something out of the blue that I may or may not be an expert in. And then I have to spend some time becoming an expert in something else. So absolutely, if you find what I do valuable here on the live streams, understand that there's even more value behind the paywall. And I segregate these two things very carefully in order to protect my subscribers and protect my patrons, and to give them value that everybody else isn't getting. And if you are interested in what the market reports are like, you can find some of them now for free on my YouTube channel, some of my older ones, some that are interesting or made salient and nearly prescient observations about markets, in oil in particular. So you can look at those things there. To give you an idea, this current bull market in Bitcoin, I noted the reversal signal on the monthly chart in March and made note of it, and told my subscribers and told all my anybody who's an early adopter, oh, by the way, the bear market, it looks like it might be ending, and you might want to think about this, because these kinds of technical signals are very significant. We'll see if the sentiment has changed or not. Turns out changed in a big way. And anybody who took my advice that day, or anybody who listened to that and didn't take my advice, because none of this is meant for advice in any kind of fiduciary sense, right? What I do here is purely for informational purposes only. You do what you think is interesting, and what you do is in your best interest. Consult your financial professional. I'm just some guy on the internet. I'm not, I'm not a fund manager. I don't have my Series 6. I don't have my Series 7. I'm not a financial advisor. But I can point out things that I find interesting and help you make better decisions. That's my goal here. That's my job. That's what I can do. I can give you information and teach you how to read charts, teach you how to look at markets in a different way, and help you make sense of all of the crazy. So tonight we're going to talk mostly about money. We're going to talk mostly about gold. And we're going to talk mostly about Bitcoin in relation to the things that we now know about what happened over the skies of Iran late Wednesday evening. So let's update as to what we know today. Turns out that Donald Trump nearly bombed Iran yesterday, or last night. That would have been bad. The reason he didn't comes from a New York Times article buried deep. And I know the Times is a terrible source, but I got news for you. In this one rings true. That buried deep in a New York Times article, which I've linked to in my latest blog post over on my blog, going over a lot of the things we're talking about tonight. That first Trump was told, yeah, no, absolutely, it was shot down over international waters, the drone was. Then it turns out 15 or 20 minutes before the planes were actually due to hit their targets, well, we don't really know. We're not 100% sure. It could be, the Iranians could be right about this. Then it turns out that there were two planes, similar to the story that I laid out last night of a drone, the one that was shot down, and a stealth drone that just kind of veers off into Iranian airspace, turns on its transponder, then turns it off and causes a panic, and the drone gets shot down. No, it turns out this drone was flying with a U.S. Navy P-8, which, by the way, is an ordnance-carrying airplane. Maybe a support aircraft, but it carries ordnance to knock out radar stations and the like. Now, what are the Iranians supposed to do if those are flying around in Iranian airspace and they were told twice, multiple times over a 10-minute period before the drone got shot down, that the Iranians then turned around and said, okay, fine, you're not leaving, we're shooting it down. This was a clear provocation. This was a clear opportunity for the Iranians to, by the United States, to try and get Iran to shoot first in their war. And they did. And Trump still has to back down, which is, by the way, much to his credit. Every way, manner, shape, and form, Trump didn't fall for the bait. And the Iranians took their escalation to the next level. And I think that's part of the reason why gold didn't sell off today. You know, there's always that buy the rumor, sell the news thing that goes on in markets. And Martin Armstrong was talking about this in his blog post, his private blog post this morning about the technical analysis on gold. And I said, well, you know, and I was listening to like, no, Martin, really, you can stop being bearish on gold now. We're above 1400. Let's stop, but even he is like climbing a wall of worry. And the reason is that it might be early from a cycles perspective. I don't know. I'm not really sure, and I don't really care. But here's the gig. Gold pops to 1415 on news that Trump was going to bomb Iran. Pops to 1415, corrects back into the 1390s. 1375 is the Maginot line from a certain technical perspective, and then other people have other numbers like 1362 and 1392 and yada yada. Everybody has their own system. My system is very simple. I use very simple horizontal support and resistance, and I just read bar to bar. I try and keep it very, very simple, because the simpler your tools, the more clarity you can get, because you're not clouding yourself with too much information. You're keeping your information, your palette as clean as possible, so that effectively it's just like having a clean workspace. That way, fewer distractions means more focus, and more signal rather than noise, as opposed to, you know, a jumble of information. Like, oh my God, I got 18 signals, 14 of which are bullish and 12 of which are bearish. What do I do? You freak out. It's the same reason why people, why car companies only give you 5 choices of color for your car. Because if they gave you 30, you'd never be able to make a decision. Okay? So human beings are really good with a certain number of choices. So that being said, gold pops to 14.15, corrects back down into the 1390s or so, starts to look a little weak. Like this could be a buy the rumor, sell the news. The news happens, and then Trump doesn't go to war with Iran after the drone gets shot down. It's time to sell. This thing's probably over. The short covering's over, and then everything can relax. Everybody can relax. But that's not what happened. Okay? That's not what happened. What happened here was the more information that came out, the more it looked bad from the Americans' perspectives of what they did, and the more it looks like, in the long run, Iran is now going to have a free hand to continue to asymmetrically attack the United States back, and the United States allies back. They're not going to attack the United States directly. I think this is the last time you're going to see Iran shoot down any of our drones or any of our airplanes or anything like that. The United States isn't going to be stupid enough to send any more in there. If Trump's response to this means anything at all, it'll be that he'll set Bolton and Pompeo and the rest of them down and say, "This is it. We're done. No more. We've brought this to the cliff's edge. The Iranians didn't blink. We pushed them to the cliff edge, and they're willing to go off. They're willing to take us over the cliff with them. Oops. Okay, time to back off. That means everybody starts backing off, and I would say that the odds of John Bolton getting fired here have risen to about 2-1. He could still maintain his job, but I think it's getting better. I think the odds are rising, maybe 3-1, that he gets fired now. And Pompeo is at about 5 or 6-1, to be honest with you. So gold then trades all day today, quad witching day, options expirations everywhere. It's the end of Q2. So you've got quarterly options ending today. You've got normal options, quarterly options, special monthly options, options on future. Everything ends today. Closes today. All sorts of crazy shit could have happened today. Markets were subdued. Dow was off 50 points. Bond markets didn't move very much. Quad witching day, nothing happened. And gold held its water. The only thing that went crazy was, of course, the thing that doesn't actually trade within that system, and that's Bitcoin. We'll get to why that was in just a minute. So now, so this is what we're looking at. One of my subscribers, and again, for subscribers who subscribe at Patreon at the $4 level higher, $4 level and higher, get access to a private Slack server where I hang out all day with other patrons and we share information, talk, discuss various issues from culture to geopolitics to money to crypto to everything. It's not a lot of people. It's not very heavily trafficked, but what's there is a high concentration of incredibly high quality conversation. And I cherish it. It's a great community, and it's like one of the best things I ever did. I get information that I don't have time to find on my own. I get information curated from different perspectives, and it all gets dumped into my lap in a way that makes me a better analyst and makes me a better service provider. Great chart was posted up today by one of my subscribers who's also an active trader, which was to show Bitcoin and the 10-year yield. Or the Bitcoin and the price of the 10-year bond. And literally the two charts were in lockstep over the course of the last 4 months. The whole Bitcoin bull market is moving directly in relation to the safe haven trade in the U.S. Treasury bond, the U.S. 10-year Treasury bond, which is the most liquid and single biggest and deepest market in the world. And all I said in response to that was, safe haven status unlocked. All of this is a massive safe haven trade. And if you don't understand what I mean by the term safe haven, you're not a trader, or you're not an investor. You're not a guy plugged into to financial speak. But safe haven trade, for lack of a better term, is that during times of stress and chaos and crisis, people move to the assets they need to have to shore up their personal counterparty risks, right? So if you've got loans denominated in dollars that you have to pay back, you go out and you sell other investments and you get the cash in order to be able to make sure that you can make your loan payments, make your mortgage payments, make your car payments or whatever. In financial world, it's to cover interest rate derivative swaps and other hedging strategies. And so hedging strategies get unwound. People move to cash. They rotate out of one asset class and into another one in order to defensively position themselves. I don't have to go too technical into this, but understand that that's what people get defensive. And your safe haven, classic safe haven assets, when we're not talking about times of incredible stress, are as follows: U.S. Treasuries, German Bunds, Swiss franc bonds, Swissies, gold, and the dollar. Those are your 5 safe haven assets. There may be a couple more, but that's really what it comes down to. Treasuries, German Bunds, Swiss bonds, gold, and the dollar itself. That's it. Those are your risk off trades. It's when you're trying to take risk off the table. When you want to deploy risk, you buy equities. Okay, you buy high yield junk bonds. Okay, you buy high yield commercial paper. I guess you can put a 6th asset class into the risk off trade, into high investment grade, ultra high grade investable paper. So ultra high yield corporate bonds like Apple, right? Apple's credit rating is never going to drop below AAA. It's just not, or whatever the hell Apple's current credit rating is. Apple's probably one of the safest bond trades in the world. I haven't looked at the prices or anything like that, the yields at this point, but just in general, if you're looking for, high grade commercial paper, Apple. Low grade commercial paper, your average fracker. Okay, so you can watch ETFs like LQD, which is high grade investable corporate debt ETF, or you can look at HYG, which is the high yield investment or junk bond. Or GGnG is another junk bond ETF. Those are the 3 big ones, right? LQD and HYG, and then obviously GGnG after that. Okay, so at the end of the day, safe haven trades are insurance policies. That's another way of looking at it. Thank you, Arkball. So so understand that that's what we're seeing here. That gold above 1,400 and holding into the close of the week is a big safe haven trade. And yeah, the dollar got killed a little bit this week because of the Fed's and then you have all this happening the same time the Fed goes ultra dovish before cutting interest rates. And that tells you that the central banks are scared out of their freaking minds as to what they're seeing. Because they've completely reversed all of their monetary policy trajectories in 6 months. In 6 months, from December to June, we went from rate hikes, 3 rate hikes next year, to 2 rate cuts before the end of the year. Possibly 3. There's only 6 months to go. I mean, what's the Fed going to do? Cut in July, September, and December? So understand that that's part of what's going on here. With the Fed's ultra dovish statement, gold was already set up to break through 1375. Then Iran shot a drone out of the sky, pushed the price of oil up $5 a barrel, and the price of gold up 45. Now, Martin Armstrong is saying in a private blog post this morning that from his sources, there were a lot of Middle East buying, pushed the price of gold up. And then once it got through 1375, then short covering took over. But we're not into short covering anymore. It's been 48 hours and Trump's not going to bomb Iran. The incident's pretty much over. But why did gold close at $1,400, depending on what you're looking at? 1403 on the futures exchanges and 1399 and change on the spot market. I mean, it doesn't matter. $1,400. What's going on here, right? And then Bitcoin is getting the It's getting the sympathy trade. And if you've been watching Bitcoin carefully all week long, as Bitcoin's risen from broke through 9,000 back and closed today, or is trading right now, because Bitcoin never closes, at around 10,000, what I've noticed all week is a lack of sympathy from the rest of the market up until today. That what we saw actually earlier in the week was Bitcoin rising and all the other cryptos falling, which is a classic safe haven move. Pull in all your spec bets in altcoins and utility tokens and all this other shit that you've made money on. Well, Bitcoin was struggling to get through 9,000. The minute Bitcoin's moving through 9,000, it's doing so on a safe haven trade, meaning liquidity drops out of the rest of the crypto market and piles into the trusted asset. There are 3 coins that did really well this week: Bitcoin, Litecoin, and Dash. Pretty much nobody else did. Now, except for today. But Dash was trading strongly all week, and even Dash was lagging behind Bitcoin. Litecoin, on the other hand, is killing it. Absolutely killing it. So you've got to understand that we're seeing a massive flight to quality. Massive safe haven trade in all the way across all asset classes. And once you see it from that perspective, everything starts to make sense. And if you're still unconvinced about Bitcoin, got news for you. The world thinks Bitcoin is a safe haven trade. Doesn't matter what you fucking think about it. Doesn't matter if you can't hold it in your hand, I don't own it, or any of this other fucking bullshit Peter Schiff crap that I've heard out of people for the last couple of weeks, as they sit there and basically have fucking envy. And their envy is so deep, and their bile is so deep, that their gold positions have all been killing them for the last 8 years, while they've literally watched life-changing money go by the board, just waiting for the day that Bitcoin collapses. It's not collapsing. If anything, it's confirming its status every day that it's a safe haven asset, and it's the future reserve asset of the world. That includes all the shit that the central banks are going to throw at it. Because at this point in time, if the central banks couldn't kill Bitcoin, it ain't being killed. And to anybody who says to me, well, they'll just cut the net, they'll just kill the net. I'm like, great, they kill the net, they kill their own power. They kill everything. The fucking world economy, 99% of all of their wealth is stored in digital form and is in illiquid, and a lot of it is illiquid. Okay? Their wealth is just trapped in illiquid form. They own stocks, they own positions in stocks and bonds and real estate and stuff. It's all illiquid. It's all overvalued. You've got to understand that all these people that you're talking about have all this power that they can just shut the web off and kill your Bitcoin. They kill themselves if they do that. It'll never happen. Okay, the biggest thing you have to worry about at this point is somebody setting off a nuke setting off an EMP or a low-grade nuke over a data center. Sure, and at that point, I want gold. Got news for you guys. I own gold and Bitcoin. I'm not stupid. It's called a hedge. So the safe haven trade is here. The central banks are all buying. Central banks accounted for 15% of all gold sales in 2018, which is why why gold kept putting in higher and higher lows, as it kept bouncing up against the post-Brexit high at 1375. Couldn't break through it. But every correction was more and more shallow. Was shallower and shallower until this year we finally had a correction to 1260, and all it took was what, 2 weeks to go from 1260 to 1400. It's a classic definition of a false move down. Classic example of a false move down. When gold should have broken through the post-Brexit high back in February, and they pushed it down $90 on bullshit, and now when shit gets real, we're at 1400. And a 3-year septuple top. Okay, I show you the weekly chart of gold. I'm going to actually pull it up here. Just to show you what I'm talking about, right? So I'm going to do this because I can do this. Hold on for a second. It's gold. Come on, Excel, open up. Boom, we'll make the chart really big, and so you guys will be able to see it. All right, we might be able to see it. We'll see. And we'll go to the desktop. Hold on for just a second. There's a desktop. So I don't know if you guys can see that or not. I'll zoom in. So this is the gold weekly chart. And you'll see that there's 1, 2, 3, 4, 5, 6, and recently 7 attempts over the course of the last 3 years, because this goes all the way back to 2016, this chart, that we tried to break through 1365 to 1375. And look at how short it took. 4 weeks, really 3.5, because this move started on a Thursday. So this is 3.5 weeks to go from 1280 to 1400. And this chart's not even updated with today's action, because if so, then you'd see a peak at around 1415 and a close of 1400. This is actually from 2 days ago, the last time I updated this chart, when I was writing an article and I used it. So that article's over at Money and Markets, by the way, moneyandmarkets.com, which is where I write weekly. So, so understand that that's what we're dealing with right now. Okay, we're dealing with this kind of massive safe haven trade. Wow, hold on. ArcVault saying that that Facebook's Libra was told to cease and desist, and that came from Rob Kirby. Really? Wow. Rob Kirby, I would believe. The guy manages tens of billions of dollars. Rob Kirby is the real deal. Wow. That's interesting. That's interesting. All right, thank you, ArcVault. You guys are talking about GBTC, which is the Bitcoin ETF. Yeah, they're the custodian. You don't have to hold them yourself, but you have to deal with the counterparty risk of your broker going broke. There's always a counterparty risk somewhere. If you're not holding your Bitcoins in a paper wallet and you're not holding your gold in your hands, everything has counterparty risk. So, you know, at the end of the day, everybody who complains about, well, the internet, this, that, yeah, I know, got news for you. The internet goes down, your brokerage account doesn't mean anything. You can be sitting there with allocated coins and a allocated 1 ounce gold eagles, which you can hold in your IRA, by the way. Yeah, you can hold them. Now, I used to have a self-directed IRA with Everbank that I held 1 ounce gold coins in. I got news for you. The grid goes down. Do you think Everbank's going to have my 15 or 20 gold coins sitting in a safety deposit box somewhere waiting for me to show up and pick them up? The grid goes down. I'm not even going to be able to get to the Jacksonville bank where those things are supposed to be held in the fucking first place. You need your own private keys, and you hold them in a paper wallet, or you hold them in a hardware wallet off, outside of everything else, and then you write down your recovery seeds as per necessary. And if anything that you're going to hold long term, and that's hold on for dear life, anything you're going to hold in Bitcoin for long term, you should probably hold in cold storage in a paper wallet where the private keys are just written down. And your address and your private keys are just written down. That's all it is. And then just note how many Bitcoins are in at that address. But you don't even need to know that because the ledger knows it. Yeah. Patrick Vidian says that been buying Bitcoin via Coinbase. They have a verification that is literally off the wall. Peter Schiff's book, Real Crash, has 17 updates. Yes, because Peter Schiff is full of shit. I've met Peter Schiff. I like Peter Schiff. I mean, he means well. But he's completely full of shit at this point. He just is. He's completely full of shit. And that's that. He's never going to be... I got news for you. If I ever get my podcast off the ground on a regular basis, Peter Schiff's not going to be a guest. Because I'm just going to have to call him out for being a fucking pogue. I'm just going to have to call him out for being a fucking pogue. For giving Austrian economists a bad name. So. All right. So... what I really want to talk about now is, and I know we're going for what, 15, 18 minutes here? Let's see. Where are we here? Well, 29 minutes. Holy shit, I've already been going half an hour. The last thing I want to talk about, or the next phase of this, is talk about where we're going next. Because now, if this is this massive safe haven trade, what's going on here? Is this the beginning of the gold bull market? Well, it could be. And let me bring up the chart of gold. to show you what I'm talking about. Oh, wow. Bitcoin's sitting here at 10.1. Like, it's gone up 75. It's gone up $50 since I started live streaming. So let's get that out of the way. That out of the way. Come on. That out of the way. Go away. So you can see we're trading at 10.1 on. Come on. Get big. There we go. Come on. Couple of clock cycles. It'd be nice. All right. So what in the motherfucker? Stop it. All right, hold on for a second. Let me get that set up. My browser's gone freaking crazy on me. You tell me that I don't have any clock cycles? Are you kidding me? That's because, yeah, there you go. Thank you. So I'm going to bring up the big chart of gold. It'll take a second for that to happen. I got to go through a number of different screens, and then I'll make it big, and then we'll get that. Okay. All right, well, this will do. So, investing.com there, you go there, that looks good. All right, so let's talk about this. And boom. So there's the desktop. This is my desktop. This is the price of gold. So this is the monthly chart of gold. So every bar here is a month going all the way back to 2014. And you'll notice how important this 1375 level is. You can even see it on the monthly chart. 1, 2, 3, 4, 5, 6, 7, 8 different months, 9 different months where we attempted to close in that 13 above 1350. Really, 1350 is the issue from a monthly closing basis in gold, right? We never saw a closing price above 13. 13. This is the only one. We closed about 1350 back in right after the Brexit vote. That would be July 1st, 2016. And then you got to go all the way back to 2014, to like March of 2014 to see gold above 1400. So this is an incredibly important, technically significant move here in gold. So I just wanted to make sure you saw it from this perspective, because when you see this kind of move from this level to this level, and if we close above 1350 here, which I would be shocked if gold moves down, if they are able to move it down $50 in the next 5 trading days, given the situation, then the gold bull market is not here yet. That's fine. That's fine. It'll come a little later. It doesn't matter when it comes, it's coming. And everybody knows it's coming. So some things that came up in last night's discussion, and I know that there have been a lot of comments. I'm not really listening to them much, but so what came up last night was a basic level discussion about gold and getting remonetized, because everybody's worried about this. Everybody's thinking in terms of, are the Russians and the Chinese going to issue a gold-backed currency? I'm like, or are they going to gold back the ruble or the yuan or whatever? I'm like, no, they're not. They're just not. There's no reason for them to. In this day and age, we're not going to. I mean, look. In order to properly value everybody's gold reserves, you really think that $1,400 gold is not going to see, if they made gold convertible at $1,400 an ounce, do you really think that the Russian treasury would continue to have 2,200 tons of gold? No. If the Russians were to put all 2,200 tons of gold up for sale tomorrow, do you think it would sell at $1,400 an ounce? Yes. I don't even think it would be much of an issue. I think I think people would be lined up 10 deep. You want to talk about a bid to cover ratio? If it was like a bond auction. Yeah, okay. Now, if the Russians were to auction their 2,200 tons of gold off to see what kind of price they would get, it wouldn't be $1,400. I can tell you that right now. Not in this moment. No way. Not in this market. No way. So we already know that there's a huge disconnect between the paper price of gold and the physical price of gold. So creating any kind of gold convertibility is insane. Now, gold cover clause, where M3 or a country's M3 or M2 or M1 is converted, is tied directly, like we used to, to our gold reserves. Sure, that I believe that's coming. I know that's coming. Like, because if it doesn't come, then the world's going Bitcoin. If the only way for the national currencies, state-run currencies, to save themselves is to remonetize gold. But it will not be convertible, and we will not be trading gold coins amongst ourselves, and we will not be trading gold dollar certificates amongst ourselves. Not unless, and we certainly won't be getting anything close to convertibility until gold's $15,000, $18,000, 15, 10, 15, 18. Every time I think about this number, should it be 7,000, 10,000, 15,000, 20,000? I mean, what's the number? In a hyperinflationary scenario, what's the number that gold should be trading at, given the sheer number of dollars that are out there, and the amount of gold that's in existence? I tell you, it's got to be somewhere around $30,000 probably. I haven't done the math recently, but it's a lot of money. Okay, it's a lot of money. Gresham's law means gold is perpetually undervalued, and therefore it is hoarded. And that's part of the reason why it's hoarded. Is also why it retains monetary character. And it's the same thing with Bitcoin. Bitcoin is volatile. Of course it's volatile. It's volatile because it's in an incredibly illiquid state. Okay? And nobody understands, again, how to value it. Warren Buffett doesn't own gold because he doesn't know how to value it. Are you kidding me? You don't know how to fucking value gold. All you gotta do is look around the friggin', all you gotta do is look at the friggin' world in terms of its in terms of global M1 or M2, and I'm like, why wouldn't you be buying gold? You're just stupid not to buy gold. But that's whatever. That's neither here nor there. People like that say that because they don't want to understand, because they don't understand, they don't want to undercut their existing investment portfolio. They're really just talking their book. Now, as far as cryptos are concerned, a lot of people I know have a hard time valuing it. But once you're able to kind of quantify it in the same way that gold is quantified, and again, this gets into that great article on Medium that came out a couple months ago, talking about valuing Bitcoin based on scarcity, which I've talked about before, and how Bitcoin's price rise has mirrored its what Saifedean Ammous calls stock to flow ratio. The stock to flow ratio is very simply the stock of money of a particular monetary asset versus its projected inflation rate. And because Bitcoin has a programmed inflation rate, we know what its stock to flow ratio is going to be through time. In gold, we kind of know at this point because the world adds about 1.5% new gold every year. Oh, by the way, that number will rise as gold's price rises, and all of a sudden investment money starts flowing into the gold mining sector, which right now is literally been nearly destroyed. So if there was ever a sector to buy at this point that's unbelievably undervalued, it's both gold and silver mines. Unbelievable opportunities in both gold and silver mines. So, right. Hayakaden says Bitcoin's volatility is due to its pegging against the USD. One Bitcoin is still a Bitcoin. It's just like 1 ounce of gold is 1 ounce of gold. We only care about Bitcoin in terms of its dollar value, because we pay our lives in dollars. We use dollars every day to prosecute our day-to-day life. But to think about it at the end of the day, I don't value my gold reserves in dollars. I value them in ounces. I just say to myself, how many ounces of gold do I have? I have these. I don't think that's enough. I should buy some more. But I don't. I think I have enough gold. I know I have enough silver. I don't know that I have enough cryptos. So look, guys, crypto is nowhere close to becoming a payment system. It's still purely being traded based on its ability to store value. Okay? And yes, the volatility is a function of markets function of sentiment. They're markets. Markets trade on momentum and sentiment. It's what they do. Okay? But depending on how you look at them on a, if you look at them from a day-to-day basis, yeah, they're incredibly volatile. You look at a monthly basis, they're incredibly volatile. From a yearly basis, Bitcoin's pretty much in a fucking straight line to the moon, baby. And there's no way of arguing that. So, if you buy gold mines, will you really own them? Well, AF Rules asks, well, you know, considering the age-old adage that, you know, pretty much every gold mine is a hole in the ground with a liar standing over it. And then all you're doing is buying shares and stocks that carry massive counterparty risk in an age of, you know, potential broker, you know, collapse. Yeah, I agree. I'm not, you know, I mean, it's like everything else. Everything has risk. All investments have risk. It's the way it is. Life is risk. You can't do, this is part of the argument about, you know, why these guys that continue to go on and on and on about how Bitcoin's just an idea. It's not real. I can't hold it in my hand. It's not true. See, I can hold, where's my treasure? I brought it out the other day. I can hold it, it's right here. Here's my treasure. I can hold my Bitcoins in my hands right here. It's right here. These are my Bitcoins. Right here. Fuck you. I can hold it in my hand. See? I hold it. And I take this thing and I plug it in. It's like no different than holding a credit card. Here, look. Money. It's real. It's not necessarily the optimal form of money. It's just, it's still real. So, where are we headed money-wise? This is 42 minutes in now, so I got to start wrapping this up because I do have to get out of here on time tonight because my wife is leaving to go visit her wife and daughter are leaving in the morning to go visit her parents and Sophie's grandparents for about a week, and I'm not going to see them, so I'd like to spend a couple of hours with Camille before she goes to bed tonight. So where are we headed? Well, where we're headed is into a very interesting phase where there's going to be competition for people's acceptance of what new money units are going to look like. We've been living through this age of publicly financed money or public money, right? Government-controlled money, public money. But we're rapidly approaching that moment where the public institutions are going to lose all confidence, the people's confidence, right? All faith in public institutions are going to fail, including public money. When we talk about gold at $15,000 an ounce, Bitcoin at $150,000, we're talking about a loss of confidence in political and institutional systems. The dominant political order not serving the needs of the people and serving as enough of a break against people's worst and basest instincts. That's where we are today. We're in like the third inning of this. We still got 6 more to go. Maybe even the second inning. We got a long way to go. So, I mean, the middle reliever's not even warming up in the bullpen yet. So, if that's the case, what does this look like on the other end? Well, if we're moving from a public wave, the massive end of a big public wave to a private wave, then it only makes sense that there's going to be competition in the interim between public money and private money. And so what I think is going to happen, I think the people who keep arguing, asking me about what about Russia creating a gold-backed ruble or China making a gold-backed yuan, I think what you're asking is, will Russia institute some kind of monetary discipline vis-a-vis gold, and in order to compete with the rise of private currencies like Bitcoin, Litecoin, Dash, and the rest of them? This is my point. These are private monies. And so far, they're unhackable. If the governments that want to maintain some semblance of trust to the people are going to have to get on that bandwagon and say, look, our money is as good as their money. It's as good as the private sector's money. Government's going to be put on their back foot. They're going to have to prove that they're still trustworthy and that they can manage their money correctly. And the Bitcoin markets and the gold markets serve, and any kind of tokenized gold market serve, right, where you tokenize gold reserves and then issue cryptocurrencies based on it. They serve as the ultimate check and balance against government profligacy, which is the reason why people hold gold now anyway. So you take it and you extrapolate it out, and I think the next 10 to 15 years of monetary history is going to be this fight between public money and private money. I don't know why the hell I'm telling you this on a fucking public live stream. This should be the subject of my next freaking newsletter. But this is what I'm talking about. This is where I think we're going. And then eventually we'll see if the governments can ever hold to their and be reined in and have to hold to their own and hold to their promises. They've never held to their promises in all the thousands of years of human history. So I don't garner much hope for that, which means that in the end, private money is eventually going to win. We are living at a very interesting time. And I'm going to speak with Crypto Rich, I think, next Thursday. He and I are going to sit down for another hour and talk about and do another, another interview on this one. That should be fun. We're going to do that next Thursday. Should be out by next Friday. So we're going to see this play. We're going to see this dynamic play out. And it's going to be good for gold. It's going to be good for crypto. It's going to be good. It's going to be bad for the dollar. In short term, it's going to be good for the dollar. Okay? Because there's just such a huge synthetic short position against the dollar that the dollar can't drop here. I'm sorry. No momentum analysis that I've seen. No offense to my subscribers and my followers who funnel me information from the other services that they subscribe to, which I appreciate greatly. And a lot of them are either momentum or technical based. And I'm like, look, we're moving into a situation in time, into a moment in time where old rules don't matter, because the definitions of within the markets of what is and is not a safe haven asset are going to change, or are changing. We live in a world right now where the S&P is at an all-time high. Gold is breaking out of a massive technical base. Cryptos are ascendant again, and safe haven bonds are trading at unbelievably low prices, or unbelievably low yields and unbelievably high prices. Look at what you're talking. Look at what's happening here. It's all a massive safe haven trade. All the assets I talked about at the beginning of this thing and defining them as safe haven assets, they're all rising at the same time, including the dollar. Even though the dollar is down this week, the dollar is still up. It's still stronger than it was 5 years ago. And that's what you have to think about. You have to look at, sometimes it's worth it to take a step back and look at things from the big like yearly chart picture, quarterly chart picture, and you can see things clear as fucking day when you get away from the noise. Again, it's why you keep things as simple as possible. It's why you don't overly complicate your analysis, the tools that you use to create your conclusions, because otherwise you will get lost in a fugue of confirmation bias. Because the world is hard enough. Why Martin Armstrong created his computer. He's like, I can't analyze the world on my own. I need a fucking computer to do it for me. I'm like, okay, fine. I listen to Martin's computer, like a lot of people do, and I discount it based on my own observations, and that's fine. Perfectly reasonable. I don't consider anything to be, I don't consider myself to be an objective source of truth, and I don't consider anything else to be an objective source of truth. But, when you factor all those things together and do your own, in your own analysis, and you bounce ideas off of other people, you start to eventually, over the course of time, get a good sense of what's actually happening. So. All right, let's go through the questions. Let's go through some of the comments real quick before I bolt, and just to talk to you from there, and then we'll go from there. We'll and then we'll let you go for the evening because I need to get out of here. Yeah, so Hayek goes back to talking about my point earlier that Bitcoin was up, but everything else was getting crushed. But all of them are doing better against the dollar for the most part. I was talking about I was valuing my portfolio, my crypto portfolio. I've got Blockfolio on my phone, and I've got 15 freaking cryptos that I'm interested in, and I scroll through them to get an idea of what's happening. And I could see over the last 48 hours, it was very interesting to watch how none of them were moving. They were all selling off slightly, not a lot, slightly. They all sold off a little bit, and Bitcoin jumped. And now that Bitcoin's over 10 grand, and as it moves, and this happens all the time, and it's just a normal thing that happens in Bitcoin, because most of the crypto market is still a proxy for Bitcoin. and that there's not that much more money having moved in at this point to the entire market, and therefore most of it's concentrated in Bitcoin. When Bitcoin rises, everything for the most part rises with it, but they, albeit at different rates. And so the altcoins are always going to be lagging indicators, are always going to lag Bitcoin on the way up, because most of the money is going to move with Bitcoin. Then when people start profit taking, they rotate out into other coins and into dollars, as well as go, oh look, this is a bargain relative to Bitcoin. This is a bargain relative to Bitcoin. When those valuations versus Bitcoin get stretched, then people rotate out of Bitcoin back into and into Litecoin or Ethereum or whatever. And it's no different than what happens with when people do the gold silver pair trade. In the midst of a bull market, people will hold on to gold, will buy gold preferentially, hold on to it until gold gets overvalued relative to silver, then they'll rotate it into silver and wait for that to collapse. And even if both correct, you know, you've hedged some of the correction by moving into silver, because silver didn't move down, isn't going to move down as far as the multiples compress. During the next upwave, silver will probably outperform gold, and they'll make money. They make money playing the ratio game. It's a perfectly reasonable thing to do. People do it all the time, and it's a very lucrative trade if you do it right. It's the same thing with the cryptos. Tim Cutler, I think you're responding. Tim Cutler says, I disagree. Gold began its advance at 2:01 p.m. on Thursday. Yes, it did. But it broke through 1400 at 9 p.m. that night. The advance started with the FOMC's, on Wednesday, with the FOMC's statement on Wednesday. Absolutely. There's no argument there that it was the FOMC's dovish statement that started to light the fire under gold, but it was the Iranians that threw freaking gasoline on the fire. Okay, and that's what set it off. Because otherwise, I think we would have had to move up to 1370 or so, and then we would have meandered around, and then we would be sitting here talking today about whether or not, you know, gold was able to hold 1355 or not, like we did for the last couple of weeks, because that's what we saw in the last couple of weeks. Every time, can they make Bitcoin illegal? They can make it illegal, but that doesn't mean anything. What are you going to do? You're gonna send people to their houses because, you know, you've got an IP. Because, you know, what are they gonna do? You traded Bitcoin, and now they're gonna send the Gestapo to your house because they IP traced you? Are you fucking kidding me? You realize that there's like 20 or 30 million Americans who own Bitcoin? What are they gonna do? Put 10% of the population in fucking jail? You think that's gonna fly? Really? No, it's fucking stupid. It's what it is. Let's see. Tom had all Ryu Shixa. It's Jessica. Tom had all of his gold melted down and made into a gold goat statue. Yeah, it's in my front yard. I like Peter Schiff, don't get me wrong. Personally, I mean, I've met him, okay? But he's doing the world a huge disservice by continuing to talk his book about gold and talk down the cryptos. I'm dead serious. And most of his shtick seems really tired. Iacus says you went long at 91.28. Good for you. I went long a long time ago. Gold needs to get does gold need to get above the previous high from 2014? When was that last high? The high in 2014 was just under 1650, and then it collapsed $400 in April. No, it needed to really just to get through the 1375 level to mark the beginning of the new bull market. Between here and 1900, which is the all-time high, this won't take very much. If there's a sincere liquidity problem and war premium, everything else now, gold will blast through 2000 here on political instability alone, emanating out of Europe with no problem. And they will do everything they can to keep it under 2,000 because, you know, 1,500 will make headlines. 2,000 will make headlines. And they don't like positive headlines in gold. They hate them. So, P. Clayton Huggins, I think you're new. If you aren't new, then this is the first time I've seen you comment. Said your 3-scenario analysis of the drone shoot down was brilliant. Thanks for sharing your always well-considered point of view. You're more than welcome, and thank you for saying so. I felt a little weird talking about it last night because I knew I didn't have enough information, but I figured I'd go with it anyway. Jim versus Ellie says, I should have Peter Schiff on my interview with podcast. Arguing means ratings and new subscribers means more money. Maybe not. We'll see. Never want to make somebody look bad. Bring them on your show just so you can knock them down. That's not cool. That's like a CNBC thing. Gold need to be back between 55 and 60K for the US to be able to back the USD. John McCain is spinning in his grave after Trump didn't bomb Iran. Oh, I know. Good. Maybe that's the ultimate reason why Trump didn't do it, because McCain wanted him to. Yeah, silver is starting to actually improve, but silver's got a lot of work to do. It's got to get above 1650, I think. I haven't looked at it. I can't give you a direct number off the top of my head because I haven't really looked at the silver chart from a technical perspective in a while. It is starting to look better, but the breakdown below $16 in silver earlier in the year was bad. So, let's see. What else have we got? If government isn't reined in, they will collapse, says El Vaquero. Ours is overextended in almost every arena. Absolutely correct. I look forward to the federal government becoming a lot less relevant. You, me, and literally just about everybody else, including the lefties who don't really realize it yet. But they will when everything collapses and they start blaming the government for mismanagement. That's coming. Happy summer solstice, Tom. Thank you, El Vaquero. I appreciate it. Tom, crypto will never be a currency for two reasons. First, the BIS will make sure of that, and two, you can't pay your taxes with crypto. Who says you can't pay your taxes in crypto? Wyoming's moving to do it. Go talk to Caitlin Long. They're working on it. Georgia wants to do it. Federal government, there comes a point where it's already a currency. And here's the other thing. It doesn't even need to be a currency. I think you're missing the point. It needs to be a store of value. I actually want Bitcoin to remain slow and expensive to use with a low transaction throughput. I want it to be slow and illiquid like gold. Like I really do. Where it sits in most people's accounts as dust that's uneconomic to move around. I actually want that. Or that, if you want to move it around on the Bitcoin network for, almost nothing, you might have to wait you might have to go 3-day settlement period or whatever. I want that because the less it trades, the more valuable it's worth, the more valuable it becomes, the closer it gets to being a pure source of a pure store of value and a reserve asset. Because a good reserve asset, you don't want to move around. You only sell your reserves when you absolutely have to. When you're facing an existential threat to your solvency. Otherwise, it just sits there as a pool of real savings on which you build your personal and or community empire. Financial empire. It's a foundation. It's a foundational asset. You don't sell your fucking gold because you want to buy a candy bar. You pass your gold down to your children. And then you lend it out for investment purposes. Same thing with Bitcoin. It's what I want with Bitcoin. State and Jonathan thinks that we're going to get state and local governments starting to take back their long lost sovereignty. I think that's part of it. I think that's very true. No, Jim, I agree with you. I don't believe that Bitcoin is a good currency. I do believe things like Dash, though, are good currencies. I think the Dash is working, and Litecoin are both working quickly to become the kinds of currencies that disintermediate the entire financial services industry. So, Edward Abbey says, great show tonight, Tom. What else to do on a dreary, rainy night than tune into the Tom Luago show? Seriously, very informative as always, and most importantly, calming my nerves. RE the Iran fiasco. Well, I don't know about that, but so yeah, I know. All right. Well, there it is. The BIS is the central bank's bank. So that makes it a pure concentrated evil. It also makes it the ultimate counterparty, the ultimate holder of counterparty risk. It means it doesn't have it is, the BIS is just as vulnerable as everything else is within the existing system. All right. Well, Is Coffee Coin, are you buying? No. I don't buy. I'm not gonna ever buy a coin based on an asset that's consumed. Low stock to flow ratio, dude. It's got no value. It's like fucking platinum. All right. I think that'll be about done because we are right at an hour and I need to go spend some time with my wife. So you guys take care. You have a great evening. We'll talk probably, I don't know if we'll get together again this weekend, maybe tomorrow because they'll be gone and I'm not going out tomorrow that I know of. So, but Sunday I'm going out to play big friggin' Civ game with a friends of mine. So I'll be off, other than doing my market report on Sunday morning, I won't be doing anything else, which by the way, the market reports for those of you who are not patrons but want to become them, every Sunday morning and every Wednesday morning, I do a half hour, 25 minutes, a half an hour, going over gold, cryptos, events of the day, the whole 9 yards, oil, the Dow, technical perspective, and my unique way of looking at markets, which I do. All right, so you guys take care. You have a great weekend. If you can, please donate. Even a couple dollars would be great. We try and keep the channel as free as possible under YouTube so that we stay under the radar because they don't care about unmonetized channels. We hope. So there it is. And if you haven't done it yet, install Brave. And you don't then all you got to do is look at ads to support me, and that would be even better. So if you like what you heard tonight, give a like and subscribe down below. Tell your friends, tell your family, all that stuff. Visit the Cafe Fresh store, pick up some goat swag. Do what you want. I don't care. You guys have a great evening. We'll talk soon. Keep your stick on the ice.